Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KINSALE Capital Group INC quarterly report. KINSALE Capital Group Inc. offers a diverse range of insurance products to both businesses and individuals across the United States. The company's commercial lines include commercial property excess casualty, small business casualty, general casualty, construction, allied health, small business property, products liability, entertainment, energy, life sciences, commercial auto, professional liability, environmental, inland, marine, health care management, liability, public entity, aviation, ocean, marine, agribusiness product, recall, railroad insurance. Additionally, the company provides personal lines offerings, including high-value homeowners and personal insurance products. The KINSALE Capital Group Inc. KNSL stock price has remained relatively stable over the past year, experiencing no significant changes despite consistent financial strength and positive operational results. Several key factors have contributed to this stability. Firstly, the company's consistent earnings beats and strong financial performance have set a high bar for expectations. While these reports often highlight impressive increases in diluted earnings per share, operating earnings, and net investment income, the market's reaction can be muted if the good news is largely anticipated or priced in. This was evident in Q2 2025, where KINSALE stock experienced only a slight decline after reporting strong results. Routine corporate announcements, such as regular dividend declarations, have also contributed to stability. These events are generally expected and do not trigger significant stock price volatility unless there are unexpected changes to the dividend policy. Furthermore, analyst sentiment has been positive but stable, with a buy or hold consensus and various price targets indicating steady performance rather than high volatility. Overall, KINSALE Capital Group's consistent track record of meeting or slightly exceeding expectations, combined with market anticipation of continued strong performance, has led to periods of relative stock price stability. Net income and profit margins. A shift in favor of growth. The financial summary reveals a mixed picture of net income and profit margins for Q3 2025 and 9 months 2025. On one hand, net income has increased by 24% in Q3 2025 and 19.4% in 9 months 2025, indicating a positive trend. However, the net income margin decreased to 28.4% in Q3 2025, down from 27.2% in Q3 2024. The reasons behind this change are multifaceted. While impairment of fixed maturity securities led to a decrease in net income, other factors such as higher investment, income and returns on equity investments, lower catastrophe losses, and favorable development of loss reserves contributed to the growth. Profit margins variations also show a mixed picture. The combined ratio decreased from 75.7% to 74.9%, while the expense ratio increased from 19.6% to 21%. However, the loss ratio decreased from 56.1% to 53.9%. Overall, despite some fluctuations in profit margins, net income has shown a significant increase, indicating a positive trend for the company's financial performance. The company's financial performance indicates a consistent generation of positive operating cash flow. For the years 2024 and 2025, net cash provided by operating activities stood at $802,344,000 and $763,324,000, respectively. This trend suggests that the company is successfully managing its operations to produce sufficient cash flow from its core business activities. The company's debt level and interest expenses have undergone significant changes over the past year. According to the financial summary, the total debt increased from $337,891 to $391,164, a rise of $53,273. Additionally, the debt level increased by 8.3% from $184,122 to $199,328. However, there is conflicting information regarding interest expenses. While some pages indicate an increase in interest expenses for certain periods, others show a decrease. Specifically, net interest expense decreased by 1.2% for the year 2025 and by 20% from 2024 to 2025. Nevertheless, it appears that the company's debt level has increased significantly, while its interest expenses have shown mixed results. Management is optimistic about the company's outlook, citing strong revenue growth and improved profitability. They expect continued profitable growth, driven by strategic initiatives, and anticipate higher investment income with reduced catastrophe losses. The focus will be on retaining existing customers while expanding business operations to drive further growth. Management is confident that cash flows from premiums, investments, and other sources will cover future outlays. The company has a history of distributing wealth to its shareholders through two primary methods: dividend payments and share buybacks. In recent years, the company has paid dividends totaling $11.9 million in 2025, as stated on page 51 of the financial summary. Additionally, the company has also engaged in share buyback activities, purchasing a total of 45,627,000,000 shares, as noted on page 59. That concludes the financial summary for KINSALE Capital Group INC. Feel free to comment below, and I will be happy to answer them when possible.